All right, welcome to the second part of our series on home ownership and the path to home ownership. My name is Matt Socci. I am your host, and I'm also alongside
Eric Watson,
Mark Jackson.
All right, welcome, guys. Last week or last episode, we had a great discussion on the paths to home ownership and what that kind of entails. And we talked a little bit about that, but today we're going to dive a little bit deeper. So we're going to talk about understanding the pre-approval process. I think this is a big topic.
It really is the meat and potatoes of the first step in actually making an offer on a home.
Probably the most important step.
Absolutely.
You know, there's so many things that go into getting qualified and pre-approved, and then the steps after that are actually where it becomes a little bit more fun, you know, I think, in my opinion. So we're going to kind of guide you guys through that, talk about what the pre-approval process looks like. So if you're out there looking to buy or have not bought yet, or maybe you bought a home 20 years ago, a lot of things have changed since 2008. We're going to get you prepared for those next steps. We're going to talk about a couple different things, so that way you're ready to buy that next home. So the first thing is, you know, talking about the pre-approval process and its significance. So on our end, as mortgage loan originators, our job is to talk to clients, usually from our realtor referrals or different avenues that we get clients from, and then have that discussion on getting them pre-approved. And it's very, very important, especially in this market. I think COVID was definitely where it got really crazy because there's so many offers on different homes, but getting pre-approved is really the key to the success of the journey to getting the keys to the home. So the importance behind that and what we're going to talk about is all the different things that go through that and how you could get prepared for those next steps on your journey. So Eric, why is the pre-approval essential for first-time home buyers, and how does it differ from a pre-qualification?
Essentially what most, at least in the state of Florida, I can speak to that, realtors are going to want before they're ever going to take anybody out to go shopping for homes per se would be an actual pre-approval. Because the pre-approval process at the end of the day means that somebody like Mark, myself, Matt, has basically verified and validated that a potential home buyer is who they say they are. One, that their credit score, which is really the report card on their credit history and their ability to pay back any debt they've previously incurred, is obviously in good standing. Then we need to verify and validate their income. And we mentioned on the previous show that we wanted ideally 2 years of similar work history in a similar field. And part of that process, the ultimate validation of it, is show me your pay stubs. So we would require 2 months of pay stubs to verify and validate that the income adds up to what I'm sure the borrower shared in conversation. And then we need to verify and validate the liabilities that come with that. So in other words, do you have outstanding credit or do you have outstanding student loan debt? Do you have outstanding credit card debt? Do you have outstanding automobile loans? Those sort of things. And really what they're looking for and what a lender is looking for in that process is to know that you have the room in your budget to make that monthly payment and not default on the loan.
Right. You mentioned that in the last episode. So what's the difference between a pre-qualification and a pre-approval?
Pre-qualification is less formal.
Like, what's the biggest difference?
The biggest difference is in a pre-approval, I've laid eyes on all of those documents. I've run the credit check, and I know that I'm putting my name on a piece of paper so that both the borrower's real estate agent and the potential seller's real estate agent knows that that income, those liabilities, that credit score, all of that information has been verified and validated.
Yeah, I talked to a client not too long ago that went online to get, pre-approved. And I was like, oh, okay. So you already submitted all your documents, your W-2s, your pay stubs, you pulled your credit, all those fun things. And they're like, no.
Word of mouth.
I'm like, oh, you got a word of mouth pre-qualification. And I'm like, all right, well, we're going to start over and we're going to do the real deal now. And they're like, whoa, that's a lot different than what they went through. And that's a big thing out there, is that a lot of people in this market, they do have what I call foo-foo, pre-approvals. And that's where it comes in when you work with somebody like us at Premier Mortgage Consultants, is that we do soup to nuts, everything, and so it's bulletproof. How about Mark? What are some, scenarios or highlights, and what are the benefits of being pre-approved?
Well, the pre-approval, especially the one we do here, where it's legit pulling the credit and really looking at things a little bit closer, actually a lot closer probably than pre-qualification, shows the strength of your offer. And today's market, it's just not likely that you're going to be able to even look at homes. You may be able to look at homes, but your offer is probably not going to be taken seriously unless you have a pre-approval.
Yeah, I don't understand why sometimes realtors go out, and maybe it's the fear of them, the client, if getting another realtor and showing them homes, and then they're surprised when it doesn't work out, right? Or they don't understand that the clients don't understand that, what they're looking for is out of their budget. And I think that's a big thing, is because our job is, when we work with our realtor partners, we don't want to waste their time, and they don't want to waste our time, right? Even though for our time, like, we enjoy talking to people, and if they're not ready now, and the whole theory behind this is the path to home ownership, is that if they're not ready now, they will be ready. I have people that reached out over Easter with my CRM, and I haven't talked to them in 3 years, and all of a sudden they're like, hey, we've been watching you and listening and doing the things that you told us to do, and I think we're ready now. And that's the whole purpose of this, right, is the path. So very valid point there as well. So it bulletproofs your deal.
And I think it's worth noting, too, that we use proprietary software that we pay an annual subscription for. And when we issue that pre-approval letter to our client, and ultimately their representing real estate agent, they know we have run their file through the exact same set of parameters and gauntlet of approvals that are in the federally controlled guidelines. So they know that, as you mentioned, it really is a bulletproof pre-approval.
Yeah.
If we submit that file to a lender, run it through underwriting, we know we're going to get conditional approval, and there really probably won't be that many conditions.
Yeah, it's spot on. All right, well, let's talk a little bit about the documents that are required. So a lot of people have questions like, oh, what do I need to get pre-approved? And I'm going to list out a couple of them. So I think the most important, well, actually, I know the most important one is obviously income, right? And for us, what that means is, if you're self-employed, that means we need your 2 years of tax returns. If you have a corporation, you will need your business returns as well as your personal. And if you're a wage earner, simple, just your last 2 years of W-2. So if you had the same job, very easy. If you had multiple jobs, we would need all of them to put together the 2 year work history. After that is assets, because it's good for us to know how much money are we working with. Some people are kind of scared, like, oh, if they have $25,000, I'm like, listen, we don't need to use all your money, but it helps strengthen your pre-approval with reserves and stuff like that. And so we got assets, income. What else do we really need?
Liabilities.
Liabilities.
Well, that goes with the credit check. But.
Yeah, and I say assets and income. We are going to need 2 years worth of W-2s, or in the self-employed, we want those taxes, because that illustrates a trend of the income, not just, hey, I've had a job for 6 months, or I've had been employed in this particular field for a shorter duration of time. It establishes over a 2 year time frame the consistency of the income, so that at the end of the day, the lender knows that there's a good, significant probability they're going to be able to meet the demands of whatever that monthly mortgage ends up.
Well, and we'll go into other episodes where we talk about, if you are self-employed, we have this whole other sector of mortgages where, we could get around all that, called the non-qualified mortgage sector. So if you're self-employed, stay tuned. We're going to have those episodes coming up in the future. So we talked about the documents and everything. Eric, what about, like, when you talk to clients sometimes and, you say, hey, listen, we need this. And they're like, oh my God, I don't know how to get that. So let's talk a little bit about how can we help people game plan if they're not buying right now, but to be prepared if it's over the summer. What kind of tips and tricks do you have for them?
You're obviously going to need your W-2s, as we previously mentioned. And I think the next thing that you're going to have is bank statements. So you're going to log on to your personal banking loan accounts with whatever lender you happen, or not lender, but actual bank that you work with, and download copies of those bank statements in PDF format. You cannot take pictures of your bank statements. And we, unfortunately, we get folks that try and do that from time to time because they're not familiar with the
You
process.
can't take 35 pictures of your Wells Fargo account?
And unfortunately, the reason that you can't is at some point in time, somebody took pictures and then photoshopped the financial information, either changed account numbers and or changed balances and took advantage somewhere somehow. So the lenders all prefer PDF format bank statements.
Exactly. So, and again, if you don't have those documents on hand now is a good time to start digging them up. And a good best practice I always tell people, and I do it for myself now, is always keep a folder on your desktop or in a secure place where you could access, if you're variable income, a waitress, or overtime, last pay stub of each year, so we could determine what that income is. W-2s, keep them in a file so that way it's really easily accessible, so you're not trying to log into some HR website that for a job you don't work for anymore, etc. So just keep those on hand. It definitely makes it a lot easier. And then Mark, I think you had some piece to add to that.
Oh, you guys cover most of it, but it seems like a daunting task to collect all the documents you're going to need. But really, everything's computerized today, and like Matt said, make a folder. Even if you're not looking right now, make a folder of the information: your tax returns, your W-2s, your bank statements, so they'll be there when you're ready. And just make a list for what you're all going to need, and keep it in the file. And you may need it for other things also.
Yeah.
Just to have access to it quickly will help you.
So a lot of people get concerned with the bank statements.
You can go on any bank. I don't know of any nowadays where you can't just go onto their website.
Not that part. Looking at all the stuff that they spend their money on.
I can't help you with that, but
she goes, don't judge. We eat out a lot and order a lot of DoorDash. I was like, honestly, I don't even look at the bank statement except for the number. I just want to know how much assets you have. Now, if there's non-sufficient funds and you have over deposits, overdrafts, that can be an issue because on manual underwrites you can't have those. So we're not looking to see that you're spending money at ABC Liquor or
Total Wine
or DoorDash. We don't care. We're not looking at it. Really, what the underwriters are looking for is you don't have any overdrafts. Number one. Number two, sometimes people have buy here, pay here cars where you don't have a note, but you pay it and then they pick up on that. So another tip or trick. If you have anything like that, be transparent with us. But that's all they're looking at for the bank statements. So just as an FYI out there, we don't look or care unless something pops up.
They just look at large transactions. So if you have thousands of dollars
that's a good one.
Transactions, moving money in and moving money out, then there's a high degree of probability at some point in time an underwriter is going to ask questions.
It's got to be sourced.
Mm-hmm. Absolutely.
Anything over 1% of the loan amount for FHA and anything 50% or higher of your income on a conventional loan. So if you make $10,000 a month and you have a deposit for $7,000 outside of payroll, you're going to need to be able to source that, or those assets can't be used. So just something to pick up on there. So yeah, no worries. We're not the CIA. We're not inspectors.
Does not matter to us.
All right. So the application process. So this is kind of our favorite part, I think, is just really getting to know who we're working with. And how it kind of works is, for me, I do have a loan officer assistant, but, at times we both tackle it. So it's really just having the first conversation. And I think that's the most exciting one because then we get to understand and know who we're working with. And we have different tools that, we use, such as we call it the 4 boxes. We talk about income, assets, jobs, credit, liabilities, etc. But we really want to understand their scenario. Everyone has a different scenario where they're coming from. So it's initially, my process is we get them to fill out our pre-application. Very simple. It takes about 5 minutes to fill out. I just had an 82-year-old fill it out in 4.5 minutes. New record. Ding, ding, ding. It's very easy and simple. We did that on purpose so that people aren't taking 30 minutes out of their day to fill out an application. Once they fill out the application, they upload their docs to a secure portal. So those are the documents we just talked about. We never pull credit without having our mortgage consultation first. That means just after we get that, the pre-app tells us the story. That's what I always tell people. It tells the story. My realtor partners all know, have them tell the story. Then I schedule a call, probably a 5-minute conversation. Sometimes we become best friends. It might be 30 minutes. But it's just really understanding if everything sounds good. Then we go to the next steps, pull the credit, get the docs verified. and then we run it through our desktop underwriter, which gives us the initial approval. If it's all good, check marks, and then we issue the letter. And the cool thing with our company and how we do it is with the letter is that it gives the realtor and the borrower the opportunity to change the pre-approval lower. So we kind of max it out. So that way, if Mark is mowing his lawn on a Saturday afternoon and 911, we need to lower the pre-approval price, whatever, you could do it yourself and regenerate that PDF. And I think that's fantastic. And a lot of people don't do that. They have a Word document, and you got to be kind of in front of the computer to do that. So that's a little bit about our process and how we do it. And typically, and Eric's going to talk about that, is, once we have that, how long does it take to do a pre-approval?
We can typically do them, it really is up to the borrower. When they initially fill out that application, they're going to be prompted by the software to upload all of those documents, your bank statements, your previous 2 pay stubs, copy of your driver's license, sort of those things that we're going to need to validate your identity, 1, 2, validate your income, 3, validate the available funds that are going to be used for earnest money deposit and or closing costs. And then obviously we're going to figure out the liabilities once we run credit. And there's also some other questions that typically we like to ask in there. Hey, do you have any recent big purchases that may not show up on your credit report? What's your history like on making rental payments? Especially as a new first-time home buyer, there's a lot of lenders that are going to do verification of rent form. And they're going to ask whomever you're paying rent to, how many times have you been late? And those are the little nuances that a seasoned professional is going to know that could be a potential stumbling block. So really, that's what we do here at Premier Mortgage Consultants. We're familiar with a lot of those. We're seasoned professionals, passionate about what we do. So when we get into this pre-approval process, we've covered all of those points. Typically, we can get a pre-approval out in an hour, sometimes 2.
And if it's a little bit more complicated, if they're self-employed or have rental properties, there's a lot more that goes into it. But, focusing on first-time home buyers that are wage earners, same day for sure. And
absolutely,
we don't work, just for everybody out there, we are not Monday through Friday, 8 to 5 or whatever. We're not a bank. We all work individually for ourselves. So if you need a pre-approval on a Sunday afternoon, there's a good chance Eric's going to be free, Mark's going to be free, I'm going to be free. Eric, you were talking about how you were on the phone last night at 10 o'clock at night with a client. We don't have hours, and that's why people like us, is because you're going to have that communication, no matter what. That goes from our realtor to the buyers, our operations team. It's all in-house. We're all family, and that's a big piece there. And then Mark, talking about that. So,
well, I just want to add that whenever you do complete the prep, just make sure you include all of your assets, all of your, just the information that's there. Just make sure it's complete. And, we will find out if there's something, the lender will find out if you miss something, if you're, a co-signer on your brother's condo or whatever it is, it will come up through the process, and it's just going to make everything much smoother if you just sort of lay it all out there on the table.
So for the record, the lenders are the CIA, so they do run LexisNexis, and Mark, you actually just had a situation like that, where, if you want to talk real quick about it.
Well, the borrower just didn't disclose everything to us on the application, and it comes up. The searches they do are extensive. The information, they'll find it, and once we figured it out, we had to take a few steps to work around it. It worked fine, and the deal closed, but it just slowed it down a little bit when you have unexpected things come up.
Yeah, and that's where in the conversation, I love when clients say, "I'm just being transparent with you." I was like, "Listen, I'm on your side." And that's what everyone needs to understand. We're on your side. We don't work for a bank.
We're the advocates.
Yeah, we're the advocates and the middleman, or middlewoman. So we are here on your side. We want to understand everything and know everything, so that way we can structure it the right way, and we don't have to worry about any of those issues.
Yeah, we want it to work for you the best way as possible. We want you to be happy, because if you're not happy, it's not going to work out well for us either.
Yeah, and we don't want to get 3/4 of the way through and all of a sudden bust because something came up that we didn't know about either. Because our processors do work very hard to get all the deals through the door. So, the benefits of being pre-approved, I think this is very, very important, is that I run into this a lot, I talk about a lot, is payment shock is number one. There's a lot of people, and what payment shock means is if you're used to making a payment, let's just say $2,000, and you're buying in today's market at $450,000, and that payment is $3,500 a month. That's a $1,500 a month payment shock, right? And you might love the house, and it might work on our end debt to income ratio wise, but it's still a payment shock. So I think being pre-approved up front, even if you're not looking right now, and maybe it's over the summer, our pre-approvals, for the record, the credit report's good for 120 days. So that gives you 4 months to close on a house, and all we got to do if it goes past that is just re-pull the credit, just because things change. People lose debt, gain debt, whatever. So it's very, very important, because payment shock, I think, is a huge thing right now, because interest rates are high, and it's not forever, and we'll talk about that in another episode, the different programs that we have. We'll deep dive into all the programs, because we have buy downs and a whole bunch of different stuff to help offset that. But our job is to bulletproof your deal, make sure you are guaranteed to get that house. And I will tell you, and I'm talking about our company as a whole, because I can speak for myself, but I know from the company level, every single contract that we put in guarantees a close. I haven't seen anything fall through unless it's a condo that's non-warrantable, or it's an appraisal issue or an inspection issue. It's never a client income asset issue.
I've had a couple fail, in all honesty, not to be a fly in the glass of wine or anything like that, but it goes back to our client, our borrower, failing to disclose something. And
Right.
for some odd reason, we don't see it on the credit report, but the underwriter has access to databases and information that we don't necessarily always have access to. And boom, surprise.
Yeah. Surprises are not good in our industry.
No, absolutely not. We despise them. Don't make big purchases prior to closing. That was one of the examples. Somebody went out and bought a nice brand spanking new pickup truck a couple weeks before closing and tipped the deal to approve ineligible.
So when things are out of our control,
exactly,
we have no control. So
yeah,
when things are in our control, they always close. Always.
And we school our clients on that as well.
We have to. Hey, don't be
Don't do
opening
that.
your credit. Don't be taking over anybody's debt, and save your money. You got to have enough to close and all that stuff at the end. What about, what does a pre-approval do as far as for the client when maybe they're looking at properties? And either or.
Go ahead, Mark.
No, good.
Okay.
You're the seasoned.
When the client, or ultimately the client's real estate agent, hands that pre-approval letter over with an offer, with a genuine offer, then the seller's agent is obviously going to review that and know that this is a bona fide, good faith offer to purchase the property.
Yeah.
I can just, relay how it affected me. And when the last time I bought a house, we bought a house in Golden Gate Estates here in Naples. And honestly, it was a dream house. And it was super undervalued. So we came in and we were pre-approved. And honestly, there are so many people looking at it that if it wasn't, excuse me, if it was not, if we hadn't been pre-approved, there's no way we would have got. Because there was 10 people standing behind us ready to pay.
Yeah. No, for sure. And they're going to look at that. And I'll tell you what, like with the realtors I do work with, I always make sure when you put in that offer, copy me on the email. I like to jump in and say, hey, just want to introduce myself. And that's a big thing too, and this will probably be our next episode, is after you're pre-approved, what are the next steps? And working with a great realtor and a great mortgage person, a team, it makes this flawless. And I'll tell you, I've personally probably done over 500 loans, and I sell a lot of them because I open myself and give myself to, up to the listing agent to have that discussion, to really bulletproof and validate our client. And I think that's a big piece there, is that it's the best thing that you could possibly do is make sure you're working with a great mortgage person and make sure you're working with a great realtor, and if they work together, that's like you have the ultimate dream team, dream team.
Communication fosters cohesiveness.
100%.
Your loan officer and the real estate agent should be making the process as smooth and painless as possible. And like you said, as a team, they'll find you what you need and get you the right loan. I mean, we're obligated to, give people information that's going to give them the right loan for their situation.
Yeah, absolutely. And trust me, I've done crazy deals. I was like, give us a 14-day finance contingency, which is normally 30. Give us a 21-day, whatever, and we'll have it all closed 30 days or less. And then our typical closing times, probably 2 weeks, typical business days, so 10 to 14 business days. Depending on everyone, title's got to move, assurance has got to move, their appraisal. There's a lot of moving parts with that, but if everything's clean and easy, man, I've gotten clear closes in 7 business days. If you see stuff online that says 3 business days is not even possible, just FYI for the record. I see it all the time. I'm like, well, per trade, you got to wait 8 days, from submitting to not. So the last thing is, and not every loan originator or company has access to this, is what I like to call a VAL, right? And VAL, what is it's a verified approval letter. Okay, so something really neat with this is that we could actually submit the file to a lender. We have a few of them that will do these as a to be determined. It actually goes through underwriting. You have an underwriter. That means underwriter, it's like you had a contract, right? They underwrite everything, assets, credit, DU, which is desktop underwriter for the approval. If it's conventional FHA, VA, whatever it's going to be, and they guarantee that it's going to be bulletproof as long as insurance, the appraisal, and title are cleared.
And that's before property's been identified, right?
Correct. So once you get a contract, all you got to do is update it, put in the address. It goes to TRID, which means disclosures are going out. And there's nothing left for the borrower to really do. No. Just pick an insurance company.
Makes it easy.
Yeah, so that's something that we offer. And I use it a lot when I have variable income or anything outside the ordinary, just because it's good to have a legitimate second eye on it. So that's something that we offer for our clients too, is verified approval letter, which also makes your closings extremely faster. And then you actually get another letter on top of our pre-approval letter that it's verified approval letter. Like, it's been by an underwriter and not by me, Eric, Mark, or Johnny from Johnny's Bank down the road. So, do you guys have anything to add?
Not that I can think of off the top of my head. I think we've covered just about everything that you need as far as like the pre-approval process leading up to, hey, I'm going to put an offer in on a home.
And I have to say, I've only been doing this for a month or two, and the way that Premier Mortgage Consultants has worked, and from what I've seen in my years of working in the bank, we do everybody outside the box. Every single deal's individual, as we all are, and it's just been amazing to see how hard everybody works here to make the deal work for the client.
I forgot my new slogan is PMC. We make lending easy.
I don't know if it's easy, but we'll make it work.
Yeah, it's really not that big of a process. It really isn't. Once you've got a few loans under your belt, you've seen it all. I've been through every possible, not every, but I've got a new one the other day. I was like, I haven't seen that yet. But it's not rocket science. And a lot of you out there are going to be the easy pre-approvals. And the nice thing is with us, and we alluded to it yesterday, is that we do have 49, thank you, Mark, 49 different lenders, which means you get to go shopping for 49 different rates, 49 different products, whatever it is. We got it all. So we do the extremely tough deals and we do the extremely easy deals. So just keep that in mind. If you're a realtor out there or a potential buyer down the road, is that if we can't make it work, I promise you, there is not one person in this world that will. We got it all. We got it all. All right. Well, great chat with everybody. Great information. Nothing to add. So we are going to kick off our next series, which will be our 3rd episode, which is going to be, what are the next steps after you get pre-approved? What are the next steps? And we will probably have a guest with us, a realtor, and hopefully we can get that all squared away. So Thank you, everybody, for listening and watching. And if you guys have any questions at all, feel free to send us a message, and we would love to work with you if we haven't already. Thank you for listening to Beyond the Blueprint.